Inflation has taken the markets by storm in the 2020s, and with every percentage tick higher on the CPI readings, the market becomes a more volatile place. In this video, we're going to share with you how you can be better informed in today's hawkish Fed environment and share some of our top trading ideas for the coming months and years ahead. From topics like the price of oil, gold, and currencies, we've got you covered. Before we get started, remember to subscribe to A1 Trading for more videos like this in the future. We've seen a lot of new faces viewing our channel recently, and would love it if you decide to stick around and leave a comment. Now let's talk trading. As we've mentioned, inflation has rocked the markets this year, and for good reason. Historically speaking, high levels of inflation have collapsed economies throughout the centuries. In fact, even as far back as the Roman Empire, inflation played a role in the eventual decline of that empire and contributed towards a growing divide between the rich and poor. Crippled by inflation, emperors struggled to pay their legions, and the barbarians eventually made their advances. Of course, things have been a little different since then. We've recently seen strong demand for the US dollar rapidly pick up as US inflation data has continued to rise. Month over month, CPI has been forecast to rise by 0.7% in May 2022. At 8:30 a.m. Eastern Time, the Bureau of Labor Statistics revealed that it had increased by 1%, reaching a staggering 8.6% year over year, a 40-year high. With this context in mind, let's discuss 3 ways to capitalize inflation now. Please remember, this video is not intended to be financial advice and is purely our opinion on markets. For our Forex trading audience, we believe the best place to stay focused is the major currency pairs. This CPI news is a huge fundamental catalyst for USD pairs, since it verifies that the US economy is indeed still overheating, validating further interest rate hikes by the Federal Reserve. This is very bullish for USD, which makes buying the USD against other currencies even more appealing. If traders are searching for optimal USD pairs to take positions in, a good place to start is by locating pairs where analysis leans in USD's favor to the greatest degree possible. Some such options include shorting GBPUSD and EURUSD, which receive -7 and -5 signals, respectively, from the Edge Finder.
Okay, take a look at this. GU, strong sell bias, and you can see, look at the speedometer. How cool is that? We got the speedometer working, so sometimes you got to tap a little bit, tap it to get it to move, but now it's moving. So we got -7, a ultimate sell reading on the pound against the dollar right now. And when we look at the score table breakdown, what we can see is there's lots of stuff to look at, but let's focus a little bit on the COT data as well as the economic data. So in terms of inflation, we'll go to the inflation numbers first. Inflation right here points towards shorting the pound and buying the dollar. And look at this, pound inflation is super high, right? Even higher than the US, which is also experiencing super high levels of inflation. The pound is rising, whereas the US is falling. I mean, that is really kind of a divergence there that could be traded, and we'll take a look at that in a moment. The Commitment of Traders report, which is right down here at the bottom of the screen, we can take a look at the positioning from institutional traders. And take a look at this. We have a massive bias towards buying the dollar because look how short heavy the pound is. So obviously institutional traders seemingly do not have an interest in buying the pound. So very, very interesting to see there. Anyways, overall, this thing has a strong sell. We have targets in mind, things like that to look at with the pound dollar. So this one is hot on the watch list for possible breakouts to the downside. We had a short-term move to the upside, but now it looks still sell biased in this risk-off market.
And going long on USDJPY, which receives a 4 Edge Finder signal. Because the US dollar has experienced so much buying pressure recently, conservative traders may want to find an opportune point of entry by conducting technical analysis, waiting for a pullback and retest of key support resistance. We here at A1 Trading will be looking for opportunities to bet on the US dollar should we get favorable pullback opportunities.
Dollar index is to the moon. Okay. Let's rock it, let's rock it, let's rock it. Because yesterday in my weekly forecast, which also Mr. Nick has, I mentioned dollar strength. Breaks are definitely needed.
What do you think about that? Are you what are you thinking about the US dollar? What do you think about the Fed? What are we thinking today?
Today we are thinking the sun is still up and we're still alive and we still have like trading accounts left. Also the thing is here is that market has been very following what the Fed or Jerome Powell wants the market to think. The market has been saying, okay, 50 basis points, that is what they have agreed on. And the market goes, okay, we're pricing in 50 basis points. But you can see the 30 ones here, those who are starting to price in 75 basis points on Wednesday. Those are the ones that is probably going to pop up today. I think that is where the market is going to be like, wow, we have 8.6 now. This is, well, the Fed is way too late now. The Fed is behind the curve. They are very late, and now we have inflation so hot that it's not been seen since the, I don't know, 80s. It's like 30, 40 years ago. So yeah, that is what they're thinking. And the other problem here is, when is inflation going to stop? Because when you have inflation but not growth in GDP, you have stagflation. And that is, by the way, the worst thing that can ever happen to an economy.
Yeah, because it's not, because in the situation where you have stagflation, it's like there's an argument for good levels of inflation when prices are rising because people are out there spending and economic growth is good. There's a healthy level of inflation. Yeah. But when things are super high priced and yet the economy is shrinking and people are saving money, and I saw a report where people in the US are like 40% less willing to go on vacation this summer, and people are going out to clubs and restaurants less, and it's scary, right? There's like a big number of pullback on consumer spending, plus gas pump prices, rent super high, groceries around the world. We are seeing this major stagflation problem sort of arising.
As part of our service, we share all our analysts' trades in real time in our private Discord channel. If you'd like to receive a notification to your phone whenever we take a trade, the link to sign up is in the description below. With the trade alerts, you'll see what we're trading, where our entries and exits are, and a full breakdown of the reasoning behind each trade. Get a massive subscriber discount when you use the code A1YT at checkout with the link below. Next, we'll discuss gold. Our analyst, Michael Donahue, had this to say about the shiny commodity. I interpret fundamentals being bullish for XAUUSD due to the demand for the precious metal in several different industries and its historical status as a safe haven investment in times of economic crisis. There have been periods where gold's rise in value does not correlate with USD depreciating in value, which is helpful to consider in cases like these. According to the latest COT data, institutional traders are similarly long on both USD and gold. I am planning to purchase XAUUSD if price action retests the trend line depicted on the one-day time frame above, though this opportunity may not come if demand continues to grow quickly. Finally, we'll discuss the stock market, which is perhaps the most touchy subject on our list for today's video. Stocks have been decimated in 2022, but we believe some long-term buying opportunities could be setting up. Again, here is some analysis from our analyst, Michael Donahue. Though it may seem strange in the face of persisting hyperinflation and potential for recession, economic downturns and stock sell-offs do present myriad buying opportunities for long-term investors. If you are not planning on retiring for decades, you can utilize dips in the stock market and indices to help build wealth over time, assuming you are willing to sacrifice immediate results. For example, when the Dow plummets over 600 points like it has today, investors can seize these events as opportunities for cheap purchases that will yield returns years down the road. If your investment portfolio keeps crashing in the meantime, this does not have to be discouraging since they are merely unrealized losses. They will likely grow in value through the decades if you are invested in index EFTs and other trustworthy funds. Any further sell-offs present even more opportunities for regular small purchases. However, investing in individual stocks is a completely different story, and I personally believe that even the most skilled retail investors are not sufficiently equipped to handle the inherent risks involved.
What do you make of this S&P 500 drop?
It hurts. Every time I look at it, it's a new red candle. That's what it is. Or I have white candles. Every time I look at it, and it's like, it's broke 137.90. And yeah, okay, I guess we are pricing in higher interest rates or recession or something that is not positive for the stock market.
Yeah. I mean, so It seems like it's almost like a delayed move in response to Friday's CPI data. On Friday we had record numbers, 8.6%, an incredible year over year, especially with the Fed raising rates. And it's a natural response, right?
Here are some key takeaways you need to know prior to making your next trading decision. Inflation this year continues to be spiking higher, meaning the US economy is still overheated. This is bullish for the US dollar and other safe haven assets, but bearish for stocks. Retail traders could potentially use this news to go long on the US dollar against other less promising currencies, such as selling GBPUSD and EURUSD or buying USDJPY. Retail traders could potentially use this news to buy gold by going long on XAUUSD, since it is historically a safe haven asset, may have good fundamentals, and has a good supporting trend line thus far. Most institutional traders are long on gold as well as USD. Stock market sell-offs present plenty of great buying opportunities for long-term retail investors if you invest in trustworthy funds and keep your expectations in check.